Realized vol fell off a cliff last week. Obviously, it has had a little bit of a pop back today, which is not reflected in these numbers. But we saw a 40 level back on 10-day realized on Bitcoin, taking carry very positive, and implied kind of hanging in there just above 50. Ethereum vol sliding as well to about 60 odd in the front. And then that was around about 50 realized on the 10-day. So that's got positive carry as well, not quite as much as Bitcoin. Now, short-dated vols did collapse more than 10 vol points. That's a huge weekly move. We have had a decent bounce today. Ethereum's bounced about 7 or 8 points, and Bitcoin's bounced 3 points, but still firmly lower on the week. These key supports at 60k and 3k need to hold. 3k has already kind of been breached, but we'll see where we close. But 60k for now still intact. The macro catalysts, QRA, FOMC, and non-farm payrolls have all got the potential to move the dollar this week, which means they may well move crypto markets as well. So look out for those. And in general, the price of Gamma with this overshoot in vol, price of Gamma around 50 vol is looking quite good value to pick up some options to neutralize any downside risk. So even if you're bullish, given that we are sitting just at key supports and vol's got creamed, you're kind of being offered a bit of a freebie to, like, it's not completely free, but like it's cheap. It's about as cheap as you're going to get it in terms of vol. So owning some optionality just in case this thing melts lower, seems like a bit of a no-brainer. Even if you don't really believe we're going down, the market's offering you that quite cheaply. So from a prudence perspective, it makes sense to have some short-dated puts in the book. And that's kind of my mentality and why I flipped some of my positions around today, because I'm just looking at what they've done to the vol and the fact that we're sitting at these supports. If these supports break, I mean, crypto tends to be quite a technically driven market. I could definitely see easily 15% downside. So I don't see a good reason not to put some hedges back in place currently. And that's not because I'm bearish. That's just because I'm looking at what the market's kind of giving me, basically. All right. Looking at term structure. Yeah, this is the kind of move we saw up until sort of last night. A bit of a parallel shift in the curve, which is interesting, right? Given that the curve is where it is, you would have expected it to fall more contango, but the fact that we've got this big shift, this back-end vol really collapsing, losing nearly 10 vol points in sort of DEC and March next year in Bitcoin and 7 to 8 vols in ETH. So pretty similar moves in that long end of the curve, which is interesting, right? To see such a lot of long end selling. This kind of makes sense in terms of, well, we know that the marginal option flow is call buying in that long end of the curve, and so the vol collapsing is kind of evidence that calls are being dumped. Basically, people are kind of giving up on calls or doing more fresh call overwriting out in the longer buckets, basically to try and bring in some premium, and that's putting pressure on the back end. Now, front end Ethereum's actually up on the week as it just spiked on this latest move, but then Bitcoin not so much. It's even with the recovery today, it's kind of flat to small down still there. So that's what the term structure has been doing. Looking at relative value, we did see an uptick in the RV spread. Actually, it's gone even further. So I'd say the front end's closer to 10 vols now. So Ethereum front end trading about 10 vols over, realizes about 10 to 15 vols over, and the back end is kind of around 5 or 6. So pretty uniform Ethereum premium across the curve. Obviously, in terms of the chart going back a year, not even a year, sorry, 6 months, this is starting to look fairly elevated, this spread now. But remember, if you zoom out and you look back 2 or 3 years, you know this spread can trade up as high as 20 or 30. When Ethereum wants to have some beta, it can really have some beta. So that's something to be aware of. I certainly wouldn't be a seller of Ethereum vol versus Bitcoin vol right now, even at the 5 to 10 vol point premium. All right, so what I'm basically saying is I think this spread is skewed, positively skewed. I'd rather own it than be short it at these levels. To be honest, though, I do think the true relative value opportunities lie in altcoin vol versus large cap vol. So if you can get your hands, I mean, it's hard for retail to do, but if you're an institution, if you're a fund, and obviously some of the clients to this are those type of investors, if there are people out there offering liquidity in altcoin vol, and I think when vols are compressing as they kind of are now, you get the opportunity to get into some altcoin vol, sell some large cap against it, and then when these things move, they can do crazy stuff. So that can be really good value to own that sort of altcoin volatility. So that, I think, is where the true value lies. Like I spoke to Jeff Anderson from STS Digital. So they make markets in altcoins and all kinds of structured products in crypto. And we were discussing this is kind of like a dispersion trade within crypto, where you own that altcoin vol, you fund it with some of the big cap stuff, and you just wait for crypto markets to come alive. And that's usually quite a good high expected value trade. In terms of Ethereum, Bitcoin spot spread, it kind of has obviously gone a little bit lower in this latest downtick now, but it was starting to show some outperformance. But in the latest downtick, it's looking a little bit precarious. We did say after we broke those key levels, we were looking for more downside in that spread to then potentially initiate some call switches. Still waiting, sitting on our hands for that opportunity, and not in a rush for that opportunity. Basically, looking for a flush out to the downside, and then if that opportunity presents itself, then we shall take it. Okay, that's where we are in the relative value stuff. Looking at Skew, so this chart of Skew kind of showing Skew quite choppy. Obviously, it got into quite extreme puts. It pulled back into yesterday, and now it's gone again. So we have had a bounce back again into put Skew. We now see call Skew only comes back in July in Bitcoin, and it comes in September in Ethereum. So anything before those expires is showing as a put premium now, and the weekly put premium has gone pretty steep to about 15 vols in ETH and about 10 vols in Bitcoin. So definitely seeing some active hedging, and everyone just wants to use super short dated puts to hedge because that's the stuff where they don't have to spend that much premium. They don't want to give up on their bullish thesis, but they want to spend minimal amount of premium to just be protected for a break lower. And that's what those short dated puts allow you to do, basically. So they tend to be expensive for a reason, because they are the most efficient way for you to hedge this near-term risk that you're afraid of. And you know that could just be a violent puke lower, and that is what you're trying to protect against. Okay. But the long-term bull thesis is intact, given that the Skew pricing in the long end is still for calls, but a short-term downside flush out is looking more likely, given how the Skew has pivoted aggressively back to puts. And, often that aggressive pivot back to put Skew is a sign of exhaustion. But for us, the fact that we have not broken out of the bottom of the range yet, we think this is kind of like an anticipation type move in Skew. And actually, it probably just backs up the idea that, yes, we probably do need to break lower and flush out a bit of weaker positioning. And then that Skew might go absolutely ballistic, or it might diverge and actually start to flatten back again as people say, all right, this is enough. I'm happy to sell out my protection and bid for calls. You might see that Skew flattening as spot goes lower, and that divergence will signal that, okay, now it's time to take off our hedges and get long again. So that's the sort of thing we will be looking out for. Okay, so that's Skew. The dashboards obviously are showing vols collapse, 14.5 vols in the 1 month on Bitcoin. Like I said, it has bounced a bit, but it's still down about 10. And then spot, you can see spot's not that oversold here, but that was up at 63K, down at 60K. We are going to be showing spot relatively oversold already. But I think when you're testing the bottom of the range, the risk of like buying it because at the bottom of the range is that if it breaks the range, then it's got a hell of a lot to go down. So personally, I'm not looking to fade this move just yet. And get long. I'm looking to actually, or I have already started to get a little bit better hedged, not massively hedged, but just not completely naked in case this thing does want to melt down, basically. And then Ethereum showing vol still a little bit more elevated. As we said, the spread is trading positive, but we had a decent bounce in Ethereum vol today of about 7 or 8 vols, even in the 1 month. So that's kind of neutralized some of that move that we saw last week. Flow-wise, flows have been quite mixed, actually. They were down 15% on Bitcoin, down to about 8 billion. We saw put buying in 58 and 59K strikes. Calls were dumped in September, 90K and 110K. But then on the dip, there were a few opportunistic call buyers coming in June and December on the 65 and 70K calls. We saw bullish risk reversal buyers in December, buying the 100K December, selling the 55. That trade not looking so great today for whoever did that. Calendars, call spreads, very active. Various things going on. People selling some May, rolling into June call spreads, selling May calls to roll into June call spreads, and then also rolling some June calls into December calls through buying a calendar. So all kinds of activity going on in the calendars, nothing really clear cut and consistent. Looking at Ethereum volumes, they were down a lot as well, about 30%. This is all before today. We've obviously had a bit of a flurry of put activity coming back in today. Vols were initially smashed lower on short-dated calls being sold as we got this weekend pop, which was short-lived on Ethereum up to 33.50, and then all the call selling pushed the vol back down pretty hard. Protection buying, though, has come in since then. So short-dated put buying in that 2,900 to 2,700 area. And that has brought a little bit of a bid back to vol and a bid back to put skew. And we also saw some bullish risk reversals traded as well, buying the 4,000 strike calls in June and selling the 2,500 puts in June as well. All right, so those are the kind of flows we saw. In terms of gamma positioning, Bitcoin dealer gamma has been running short for a long time. It's about as small as I've seen it in a while. So here it's kind of moving up towards neutral. As spot has traded down, you can see we're moving towards this big strike at 60K. The red bar is 3rd of May, so this Friday, and the pink bar is June. So that is slightly longer dated. So that is telling us that the gamma profile of the dealers in Bitcoin is a bit more long down here, and it's actually fairly stable because it's a June position, right? So that's, if we were to break materially, then we're going to go towards these shorts, and that will change. But right now, that long strike is kind of compensating for all of the short strikes around the place, and that's keeping the net gamma positioning fairly neutral right now. And in theory, that should be supportive, and maybe that's the reason why we haven't broken 60K so far, because the dealers haven't had to scramble against short gamma. But that's basically what the positioning looks like. Now, ETH positioning a bit different. Net, we are long gamma, have been on the upside, but as we trade down, we could flip to short because everyone's piling into short-dated puts below 3,000. As you can see, we topped out here, long gamma. We are heading south. If we were to break down to 2850, 2900, it's probably going to be a neutral gamma position down there. So you've actually got kind of opposing positions where on the upside, Bitcoin gamma is short, ETH is long. As we trade down, that position flips. So that kind of reflects why the skew is the way it is, and the fact that Ethereum put skew is a lot steeper than Bitcoin. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.